what's happening with Chart Industries? Here's a company we've liked for a long time. Major maker of cryogenic equipment used to convert natural gas into its more portable liquefied natural gas form, as well as LNG storage tanks and engine tanks. Plus, Chart has an industrial gas division and a biomedical business where they make things like liquid oxygen therapy systems. Now, this stock had been on really what was majorly an epic roll, rallying like crazy in large part because it seemed like the Chinese were going to embrace natural gas vehicles in a major way. But while Chart's still up 51% for the year, and we've been behind it the whole way, the stock has had a tough run of late after it reported a disappointing quarter at the end of October, and it cut its forecast, so the stock's fallen $20, 17% in the last 5 weeks. Beyond the missed numbers, management seemed to be a tad less optimistic about China, and that's a market that is often mentioned as pivotal for earnings growth. So is there more pain ahead for Chart, or should we view this pullback as a buying opportunity in the stock that's given us a 164% gain since we first got behind it in February of 2011, so it gets the benefit of the doubt as far as I'm concerned. Let's check in with Samuel Thomas. He's the chairman, president, and CEO of Chart Industries. Find out more about how his company's doing and where it is headed. Mr. Thomas, welcome back to Mad Money. Good to see you, sir.
Hi, Jim. Nice to see you.
All right, Sam, just going to say point blank, should we be more concerned? You've always been straight, but you've always also said that China is the terrific growth market, but you have an increase in prices for natural gas that slowed things down. And it sounded to me like you're worried about competition. You're making some acquisitions in China. I'm always worried about their accounting over there. Is the bloom off the China rose here?
No, not at all, Jim. The long-term story hasn't changed a bit. And we're still convinced, as is everyone else there in the market, whether it's the national oil companies, the big engine producers, the big truck vehicle assemblers. But it is a pause.
It is a pause. There's no doubt. Right?
There's been a significant increase in prices without an offsetting increase for diesel prices, which is expected coming up in 2014 because they're rolling out tighter emission standards, which require more after treatment on the truck, increases the price of the truck for diesels. It also increases the price of diesel fuel because they'll have to be producing low sulfur diesel. And the refineries aren't yet able to put it to the market, so it's actually rolling back that increase of diesel.
Okay, so that should portend well for 2014, second half of 2014?
That's what the current thinking is.
Okay, good.
And we're seeing some signs of it picking up. Of course, there was a pause in terms of the rapid growth rate. We were seeing incredible growth coming through the first and second quarters. And then towards the latter end of the third quarter, there was a decided pullback with this natural gas price increase.
Well, also, you mentioned governmental intervention in PetroChina. You say point blank, which I'm taking to mean that there's some turmoil there because of possible government corruption charges.
There was for the very senior levels, whether it was corruption or political being on the wrong side.
Okay.
That seems to have flowed through. None of the people that we deal, the levels that are in our industry, have been affected. There's new senior management and control or in place.
Okay.
We expect it to be sorted out.
All right. You also talked about cost problems, both in engineering and construction, but also in the labor in Louisiana.
Well, we build our large cold boxes for the global scale LNG liquefiers on the coast in Louisiana. That's the only place where you can put them directly onto a ship.
Right, okay.
To ship them around the world. And we have seen, because of the tremendous growth in offshore construction, petrochemical construction down on the Gulf Coast, wages have gone up dramatically, both, well, everywhere on the Gulf Coast, whether it's for welders or for engineers. Some of the projects that we quoted a few years ago and we're executing on now and through 2014, we're seeing lower margins as a result of that. It's still good work, very good, solid work, but we weren't able to ramp up our productivity as fast as the wages were going up in that market.
All right, so now let's look at it from the point of view of 2014, 2015, 2016, because that's the way our viewers think of things, okay? Because they're investors, they're not trading. The long-term view for switching from diesel to natural gas, liquefied natural gas, our country and China, still very positive.
Extremely positive. In fact, the third quarter was our strongest quarter ever for North American LNG.
Okay.
We're starting to build liquefiers, which is the key. That's been the constraint. And we're getting better availability of the Cummins 12-liter engine with larger engines to come. So we had a very strong quarter for orders for fuel stations, LNG fuel stations, and also for vehicle tanks. And it looks strong going forward. The biggest challenge we have with a market that's growing like this and needs a number of pieces of infrastructure is calling the timing.
Right.
We respond to our customers. We've added significant capacity. But with our customers or their customers, there are pauses where the infrastructure build out, the different pieces of the pie, get out of sorts, and you have to have a correction in order to pull forward.
That's exactly what I'm thinking. I think it's a reset, and that people should relook at Chart. There was a very good piece yesterday by Morgan Stanley saying the exact same thing that we just talked about. That's Sam Thomas, President and CEO of Chart Industries, GTLS, gas to liquids. I think the story, the long-term story is intact for investors. Traders, okay, you saw playing with fire. Stay with Cramer.